We turn our sights now to Ethiopian markets, where the Ethiopian Capital Market Authority has announced that the legal and regulatory framework enabling the participation of foreign investors in the country's capital market system has now been finalized and will be made public shortly. Also, the government has completed its submission for the fourth review of its International Monetary Fund Extended Credit Facility, with officials expecting a staff-level agreement to be signed shortly. To discuss, we're joined on the line by Merid Fikirahannis, founder and CEO of Pragma Investment Advisory. A very good afternoon to you, Merid. Good to be talking to you once again. Welcome.
Always a pleasure to be on the show. Thank you.
So how significant, Merid, is Ethiopian Capital Market Authority's move to open Ethiopia's capital markets to foreign investors, rather, and this is in terms of market development as well as economic liberalization?
Absolutely. This is a huge milestone. I think that, let me put it this way. It is a huge milestone because, mind you, 55 decades ago, we used to have a capital market and foreign investors used to participate in it, but it was not formalized. But now, after 5 decades, now the regulator has been working very hard to establish the market. The market infrastructure is there. The companies are already being registered, dematerializing their securities. And ahead of the game, the authority is taking the lead, the initiative at the same time to say that, listen, guys, we want the foreign investors to come in and also invest, and we're already preparing the regulation. It shows, it shows ownership of the process, to be honest with you. And then the second thing is that it has been 18 months since we floated the currency, and on top of that, now the capital market aligning itself. Now that there is a market rate operating within the economy, so that allowing the foreign capital to come in and also opening capital account in this manner, it shows truly owning the process itself.
I mean, certainly a positive signal around Ethiopia's broader economic reform agenda and commitment to market openness. But on the flip side of that, how important is this review for Ethiopia, given its ongoing debt challenges as well as the forex exchanges, or rather the forex shortages?
Yes, absolutely. So it is very much important in a sense that, mind you, the IMF program is a 4-year program. Okay, it will be ended by 2028, and it has been in progress for the past 18 months, and now it has already reached the fourth review. So, mind you, the IMF is the program. The way it works is Ethiopia commits itself in terms of delivering the reforms, and then IMF delivers the required financing. Financial need of that which is the total package is around $3.4 billion that comes in stage. So having the review with the deputy managing director being present here in Addis Ababa last week with the officials, with the authorities. The Nigel Clerk was here and visiting the reforms and the progress as well. It shows that IMF is also committed, and Ethiopia is also committed, mind you. As much as possible, Ethiopia is trying to deliver on its promise of the reform package, and then IMF is also following suit, saying, okay, we're going to release the fund, because, mind you, this is the fourth one. Once the start level agreement is being reached, it will go to the board, and once the board approve it, Ethiopia is going to get another 191 million SDR package of funding that it needs to further stabilize the to stabilize the budget of the government, and also to stabilize the macroeconomy as well. So the good one thing it was expected in this process was before December, Ethiopia promised that it will finalize the Euro bond negotiation. Apparently, it didn't happen. It reached an impasse. But the bondholders are willing to negotiate, and then the Ethiopian authorities are also willing to renegotiate, and then they set a new deadline saying that by June 2026 we'll finalize it. So Ethiopia is negotiating in good faith, and at the same time the bondholders also are willing to negotiate as well. So yeah, it is very much important for Ethiopia to have the IMF on this.
You did focus on some of the positives that can come out of a positive fourth review. But could it also perhaps accelerate the pace of debt restructuring with bilateral and private creditors?
Yes, absolutely. Yes, absolutely. Because mind you, if we cannot go through this, it will affect Ethiopia. It will affect the Ethiopian. It will affect the momentum of the reforms. It will affect the momentum of the country's macroeconomic reforms. It will affect everybody on the ground, no doubt about that. But at the same time, one thing it really does is, that like IMF giving a strong support, which Ethiopia is also negotiating in a good faith with the Euro bond holders, as it gives also, it adds a momentum for the negotiation aspect. Because mind you, the last impasse, if you see their last negotiation, and mind you, all of these Euro bond holders are pension funds in America, asset managers, JP Morgans, Lazards, those are BlackRocks. Those are those are the holders of the Eurobond, and those are what Ethiopia is negotiating with. And one of the things they did not agree was they agreed on restructuring the Eurobond. They agreed on the cutting the interest, the coupon rate, all of that. They agreed, but the one thing they did not agree was the the value recovery instrument, VR instrument. So there is an impasse, but it shows that there's a good commitment, and Ethiopia is negotiating in a good faith, and the Euro bond holders saying, okay, we're willing to continue the negotiation. So it definitely adds momentum and to the negotiation, to the debt structuring as well.
Merid Fikrihanis, always a pleasure, sir. Thank you so much as we focus on the Ethiopian Capital Market Authority and the announcement of the legal and regulatory framework to enable the participation of foreign investors in the country's capital market system, that having been finalized. Thank you so much. Merid Fikrihanis is the founder and CEO of Pragma Investment Advisory.
From markets to innovation.